Good evening, everyone. It is, oh my goodness, it is 9:04 on a Tuesday. Get rid of that. Where were we again? 9:04, Tuesday, April 18th, 2017. How are we all doing? We're officially into the third week of the second quarter. Second quarter. The first quarter we did pretty well. We did rather well with all our investing, and hope you guys all had a chance to use the software. Ask any questions you got. If you got lots of questions, you guys. And I still have this cough. Can you believe that? Maybe it's just every time I get online I cough. I don't cough during the day. I put this headphone on and I start coughing. I don't know what that's all about. Anyway, let's just jump right on in and see what we're doing today. Alrighty. So we're going to take a look at our dividends on steroids first. As you can see, we still have the same positions that we had last week. So I'm going to quickly go over some of them so you can get an idea of where we are, where we stand. Actually, no, we have new positions this week. The 11th, actually, no, 7 days ago, yeah. The 11th, we bought BMO and SKT. So let's quickly go down the list and see what we're looking at, all right? First one on our list is BMO. We're looking for a target of 75.96, and right now she's at 73. Let's bring up BMO. Here she is right here. BMO opens the year at 63, goes sideways for about 6 or 7 months. Right around election time, she goes from 63 up to 74. She trades sideways for a while, and right where she is now, and this nice little sideways trend, 73.28. Okay, now we are into BMO at, here we go, take a quick look at this, 74.10. Ooh, it went down a little bit from 74.10, so we're looking to get out at 75.96. Okay, so the 12th was a week ago. So one more week, sometime next week, we're going to actually have the dividend. So we're going to see whether we're going to get out of this before the dividend comes or capture the dividend, get out. Let's quickly take a look at the seasonality and see what we can expect this thing to do in the next couple of weeks. Go from the standard chart down to the seasonality, just to give a rough idea of what we plan on seeing for the next couple of weeks. Here's where she is right now. The blue line represents where she is now, since the beginning of January to where we are now. The red line down below represents 10 years worth of data on top of one another. Okay, so it takes one on top of another, top of another, top of another to give you that average line of what it does on average. Doesn't mean that's what it's going to do, just means based on historical performance, this is the way the stock has reacted. So we're looking at, as you can see, where these lines intersect right here, that within the next week or so, we should peak right about there. And that I can deal with. Alrighty, so BMO looks good. We don't mind holding on to that for a little bit longer. Collect a dividend on that and move on to the next one. Who knows? Alright, let's take a quick look at CL, Colgate-Palmolive. Alright, CL trades sideways for quite a while in the 71 to 73 area. Right around election time. This is one of the few companies that actually went down at the election. It goes from 71 down to a 65 trading range, and then she jumps right back up to the 74 area again, right back where she was. All right, she's at 74.37. Colgate, we're looking for 74.91. Now we've been holding this since the 3rd, which is about 2 weeks. And we should be collecting the dividend probably today or tomorrow. So this number here, by this Thursday, this number is going to change. So we'll have more than 1,300. We'll find out exactly how many 1,300 dividends equals. We're just going to be doing a, what do you call it, DRIP, dividend reinvestment program, where they actually give us more shares rather than give us a check. One way or the other, it all works out the same at the end of the year. Money's money. All right, she's at 74.37 now, and we're looking for an exit of 74.91, which is good. So it looks like we can actually collect a dividend and sell it for profit. Just quickly, what did we get CL at? 73.08. So we're already into a profit with Colgate Palmolive, 1,677 profit. So once we collect the dividends, however many 1,300 is, we'll be adding to that by Thursday. So this Thursday we may not even have Colgate Palmolive on Thursday. Anyway, we'll be checking back in on Thursday. So let's see what we actually got rid of Colgate Palmolive for. All right, next on our list is Macy's. Oh, Macy's. I've held on to Macy's way too long. All right, so we got Macy's back February 21st. Okay, we bought it at $33.09. Let's bring up Macy's right here. Okay, Macy's started up the year at 40. She drops down to a trading range of 31 to 34. Goes sideways for a while. Jumps up. Gets right back in that $36 area. Makes the high of the year right around the end of November. From the end of November, the high of the year, she drops way down. And to the end of January, right down 29. She goes sideways for a while. And she's at 28.27. Now, Macy's, we want 31.10. We might end up holding Macy's into the next dividend payment, which should be coming out in another month or so. Well, it is what it is. I'm not going to get rid of it. Don't want to take the loss. I'll just hold on to it and collect another dividend. What's the big deal? It's Macy's. Everybody's heard of Macy's. All right, SKT is the last one we're bringing up. I don't know why I just did that. SKT. Let's bring up SKT. All right, SKT starts the year right on 36, goes sideways for a couple of months, jumps up to make the high of 42 in end of July, slowly declines down to the $33 area, goes sideways for about 4 or 5 months, drops down to the 32 area where she is now. All right, she's now at 33.39. SKT, we are at SKT at 32.88. All right, so we just got SKT last week. All right, so we're looking at, okay, right now it closed at 33.39. SKT right here, we're looking for a target of 33.71. And we're up 663 for SKT. All right, I can deal with that. But, like I say, we have another week to go with SKT before we're out of that one. And let's take a look at see how that plays out for us. So those 4 positions are the ones we're holding on to. The only thing we're actually losing money on, BMO, we're losing a little bit. Not much, but we've only had it for a week. So that's okay. Macy's is the big loser at $6,400 loss, 1,600 shares. We'll be carrying that for some time. There's that cough again. My goodness. All right. That's the dividends on steroids. Dividends on steroids is when we buy the stock 10 days before the EX date. We look for the run up. That means usually when a stock pays its dividend, the stock has a tendency to go up. Not all stocks, only a few. Now, how do we pick out which ones? We have the software that we created specifically to do that. Now, if you want to get access to the software, hey, be my guest. Join the membership. Get access to the software, ask the questions that you want. If you need help, one-on-one help, that's what we're here for. We're here to help you guys make money. Safely, I might add. Make money safely. All right, let's jump over to the options and take a look at those. Now, if you caught us last week, we got caught off guard because we forgot that Friday was not a trading day, and we held on to the positions into Friday, which the market was closed, so we ended up losing about $3,000 last week. Hey, it happens. I've been trading for over 20 years, and yeah, I got sidetracked and I forgot. However, this week, we have all these companies here. All right. 2 on Monday, 2 on Tuesday, 8 Wednesday, 3 on Thursday, and 1 on Friday. That is not a whole heck of a lot to choose from. 4, 8, 16 companies all together for the first week of May. That's what we're looking at. Can you believe that's hardly even worthwhile doing anything? Okay? But I put all of them. Okay, we put all those two, these two, this 8, that 3, and this one all into the software on Monday. On Sunday. So we sent you out the list of who's best suited, for investment for this week. I came up with one. That was it. Only one of them was worth getting into, and it's right here. INTC, Intel, I believe it's called. Intel, is that right? INTC, yeah, Intel Corporation. Okay. And this is what we got for Intel. Intel starts the year off right down here at 31. She makes the low of the year at 29.66, and then from there she shoots up to make a high within the next 3-4 months. Towards the beginning of October, she drops down to a trading range of 34, jumps up a little bit to 35, and she settles into a $35 trading range for the last few months, which is where she is now. Now, what position do we have for INTC? We have 100 contracts. All right. Wow. We got the 35, 35.50, and 35, 35.50. Wow. So we have 100 contracts at that. All right. I'll give up on that one. All right. So we have 100 contracts. Now, that's unusual for me to do 100 contracts. That's, wow. That's 10,000 shares. Oh, I better be right on this one. I don't think I can afford 10,000 shares. All right, so she's at 35.77. Okay, we needed to close 35.50 or higher, which is where we are. We're at 35.77, which is great. So all 100 shares, all 100 contracts are going to be all free money, which not really free. I had to put up some money for it, $11,000 to be exact. No, how much did I put up? I forget. Anyway, I do remember it was close to a 60, either 50% or 60% profit if we're right by the end of the week, which I could use that because I lost $30,000 last week. Hey, it happens. All right, so until we're up $810. Still a long way away. We only made $670 for the day. And I'm going to have to search high and low to see if I can find something to buy for tomorrow. Today's Tuesday. We got Wednesday, Thursday, Friday. So tomorrow, or sometime later on tonight or tomorrow morning, I'm going to dig deep and hard and see if I can find something, because tomorrow is the third, well, this Friday is the third Friday of the month. So anyone, any stock that has an option on it is going to be viable for this week. It was just that I looked at all of them and nothing but Intel was profitable enough for me to get into. There was one other company, but it was only like a 10 or 15% return. So I'm going to put up a big fat chunk, buy 50 contracts for a 10 or 15% return. That's not enough of a return for the risk. The risk was not worth the reward. Okay, and numbers just didn't make sense. All right. Let me just show you a few, and we'll go from there. All right. Let's go back. We'll look at AM. Okay, for the fun of it, AM. Okay, here's AM right now. They're in a sideways trend right around 32.83. AM. Now AM is in 32.83. Let's delete that. That one wasn't worth it. 32.83. So we can look at the 32. See, it's smack dab in the middle. Okay, you can't do that to 25.30 because you're going to make 5 cents. See that? It's a $5 move. I mean, it's a $5 spread, and the most I can make is 5 cents. It's not worth the money. I can't even buy the option. I can't even pay my fees with that. All right. And then the 30.35, it's only $3, which means the most I can make is $1.95, and it would have to go above $35. Okay, I don't see it happening in the next few days. So this one is not worth Well, now what I could do is this one here. Get rid of this, drop that down to 20. See, and it's still not enough. You get a $10 spread, and it's still only giving me a 5-cent window. It's just it's just not enough for the effort. Okay, so let's go back and then try someone else. WSR. Okay, WSR is a nice little move right now. It's at 14.40. It's on an uptrend at the moment, which is good because you get the dividend coming out in less than 10 days. WSR. All right, let's get rid of this so that doesn't confuse us. All right, WSR is at 14.40, and 14.40 is smack dab in the middle of the 12.50 and the 15, and you can't go to the 12.50 because it's at 2.50 and right here. What do I mean by that? Okay, here's the spread right here. Okay, the $2.50 $5 spread. It's a $2. Excuse me. $2.50 to $5. So anywhere between $2.50 and $5, that is the spread, the difference. Okay, that's you're betting on that the stock is going to stay above the $5 mark because the $5 mark is the highest part. Okay, so you're buying this one and you're selling that one, and you get the spread between the two. It's only a $2.50 spread. Okay, so if you want to buy it, how much are you paying for it? You're paying $2.50. How much can you sell it for? $2.50. It's not worth the money. Okay, you move up a little higher, the $5, $7.50, still another $2.50 move. Okay, same thing, $2.50, not worth it. The $7.50 to $10, same thing. The the $10 to $12.50, same thing. Look, it's $2.50. It's not worth the move. And if I do the next one up, yeah, look, it's $1.95. The most I can make off of it is $1.05. However, the stock is still at $14.40. It's 60 cents off of hitting that $15 mark. Now, is it going to hit the $15 mark between now and Friday? It might. It might not. Okay, do I want to take that chance? No, I don't, because look where the $15 mark is. Okay, here we are right now at $14.40. $15 is way up here, way up off this chart. Is it even worth me trying? No, it's not, because look at the movements that it's making. You got $13.79 to $13.96. That's not a big move. $13.98, to $14.18. It's like a 20-cent move, 30-cent move. Just not enough to go from here all the way up over $15 by the end of the week. I don't see it happening. So no, the only way I can make money on that is if the stock moves up. And that's not what I want to do. I want to make money if the stock moves up, goes sideways, or goes down. I want to make money all three ways. Okay? So I'm going to pass on this one. Even though the chart looks great, the numbers aren't working. So it's not just a chart, it's not just a seasonality, it's not just a software. Everything can point you in the right direction. But if the numbers don't work, it's not worth doing. There's too much risk, not enough reward. The only way to make money off of this one is if the stock goes up. That's it. Let's go to the next one. KBH. Now, KBH basically starts out the year at 1464, makes the low of the year at 1240, jumps up to a trading range of 1550, and goes sideways for what, 9 months? And then right at the end of February, she jumps up into a trading range where she is now at $20.68. And let's quickly take a look at KBH. Let's get rid of this to confuse anything. All right, so KBH is at 2068. Okay, 2068, and if you buy the 1920, The only thing I can make on that is a penny. See, the difference between 19 and 20 is $1. So the most I can make, if I buy the 19s and I sell the 20s, the most I can profit is $1. Okay? $1. That's the most I can profit off of it. But if it's costing me 99 cents and I can sell it for $1, the most I can make is 1 penny. Is it worth it? No, it's not worth it. Do I go the next one up? The next one up? Hey, it's 64 cents. But the stock has to go above 21 in order for me to make money. So no, not worth it. Even though the stock is at 2068, okay, it only has to go up 32 cents. So does it go up 32 cents? Okay, I can make my money off of that, but then it has to move up. And it's the same as buying the stock. What is the purpose of option? Is to give you leverage, to allow you to make a trade. As soon as I find one, I'm gonna show it to you. But like I said, I looked at all these and I could only find one. That was Intel. So let's jump to the next one. That one doesn't make it. KBH, we saw that one. STBA. STBA. Okay, STBA starts the year way down the $26 area. She trades sideways for about 4 months, jumps up to 28, goes sideways for 2 months, and and from there she hits the high of the year of 39. Got a lot of that profit taken for a couple of months. Now she's trading in a range of $34. And let's see what STBA says. STBA, here we go. Let's get rid of this one so it doesn't confuse us. Okay, so 33.64. Again, the closest we're going to get is the 25.30. And the 25.30 is a $5 spread, and look what we're paying for it, $5. So the next one up is $3.70. The most I can make is $1.30. However, I'm $1.36 away from the 35. It's the exact same as buying the stock. So what would be the point? Okay? So no point in buying this one because it expires in 3 or 4 days. It has to move up in order to make any money. So no, ain't worth it either. So let's get rid of this. Market watch. 8 of these. ARNC. I'm not going to look at that one because it's 6 cents. Don't want to chase it. I don't want to chase it. FE. Let's take a look at FE. All right. FE starts the year at 35. Gets to a trading range of 33. Goes sideways for about 9 months. Drops all the way down to a $30 area and goes sideways to settle in where she is at 31.47. All right. FE, take a look at what she says. FE is at 31.47. Let's take a look at the 30.31. Again, the 30.31, $1 spread, and we're paying 99 cents for it. Not enough money. Okay? Not even worth my while. FE wasn't good. INTC. Let's take a look at INTC. I mean, that's what I bought, so most likely it's going to have something. INTC. INTC. Let's get rid of this. Okay, so INTC starts the year up at 31, makes the low of the year at 29. From there, she shoots up. Takes about 4 or 5 months for a hit the high of the year at 38. Drops down to a trading range of 35, goes sideways for about 6 months, and she settled in right where she is now at 35.77. So 35.77 is close to 35.50. Right there, 35.50. Now look, I bought these on Monday for like 30-something cents, I think 35 cents. Okay, so I'm already making money on these. If I wanted to buy them today, first thing tomorrow morning, which would be Wednesday, Thursday, Friday, just 3 days, that would give me a 7 cents. This is the most I can make off that. Buy it for 43 cents and selling it for 50 cents to make a 7 cent profit. Come on, that ain't worth it. Okay? So do I want to get to 35, 36? No, because then I have to wait for it to go up to $36 before I'm into profit. Now, when I said these, I bought for 30, I think 34, 35 cents, which would allow me to buy them for 35 cents, and then I can sell them for 50 cents on Friday. Now, you buy them for 35 cents. I make money if the stock stays above 35.50. Right now it's at 35.77. If the stock goes up, I make money. If the stock stays the same, I make money. If the stock goes down a little bit, I still make money. As long as it stays above 35.50 by the close of business on Friday afternoon, I make money. And that's your three keys. Okay? If it goes up, make money. Stays the same, make money. Goes down just a little bit, make money. Okay? So that is good. Now, the reason why we're looking at Intel is because it's a very good company, number one. Number two, it has its dividend coming up in less than 10 days. And all the software, if you're a member of our if you're a subscribed member, you get access to the software. You just plug it in, take a look at it, watch some of the videos. It shows you how to use it. If you have any questions, you just ask me. I show you how to use the software, and it shows you how it has performed in the past. So then you know whether or not it's a good deal or not. So Intel, it's a good company. It's a good return. And it has showed promise with the three pieces of software that we run everything through, and the numbers all worked. They're not working today because it's Wednesday, I got 3 days left, and we bought it on Monday. So Monday, okay, this is Tuesday, right, the 18th. Monday was the 17th. Okay, and then Sunday is when we actually looked at it. Okay, because we buy everything the day, we put the orders in the day before. So for first thing Monday morning, I bought this thing, Sunday night. So first thing Monday morning, I was into the position. Okay, so see how Intel actually worked. The numbers work. They're not working now, only because it's 2 days later, and the stock moved from where it was to where it is now. Okay, so okay, where are we? Okay, INTC, we did that one. No, we want to go back to INTC. We looked at that one. SIMO, S-I-M-O. S-I-M-O. Okay, so SIMO starts the year off at 40, goes sideways for about a month, and then shoots up to make the high of the year 2 months later at 55.95, almost 56. Goes sideways for a couple of months, drops down to a trading range of 42, goes sideways, makes the low of the year. Right, the end of January at 37, goes up to subtle wishes now are at 45. Now SIMO has 1, 2, 3, 4, 5 down days in a row. Now I don't know how this thing looked on the software. Let's quickly take a look at the seasonality. Give me an idea which way this thing's going to go. Okay, here's where she is now. Based on historical performance on the seasonality, that's what it is. Historically, how did it do? We could look at a small movement in the next couple of days. So by Friday, she should move up a tiny bit. Okay, that's good to know. Doesn't mean it's going to, just says based on historical performance, there's a good chance that it might go up. So that's a good thing. Let's move back and see what the numbers look like. Let's go back to my chart and actually look at the numbers on SIMO. Let's get rid of this. Okay, so she's at 45 right now. So the only thing worth anything would be the 45s, and that's at 488. So I'm paying 488. The most I can make off this thing is 12 cents. Okay, do you want to buy something for $4.88 and sell it for $5 and make a lousy 12 cents? No, even if I bought 100 contracts, the cost of the contracts and the commissions is probably going to kill me. For the fun of it, let's just take a quick look. Okay, 50 contracts at 488. All right, the most I can make is $600. Look how much I have to pay. $24,000 to make $600. And that's gambling. Because if it doesn't stay above 45, okay, you had 1, 2, 3, 4, 5 down days in a row. Okay, how far down is it going to go? Is it going to keep on going? I don't know. It's not in an uptrend. It's in a downtrend. And if I bought it, I'm only going to make $600 on a $24,000 investment. No, the numbers just don't work. Okay, so let's get out of that one. So Simon didn't make it. Let's get out of there. Market Watch, Simon, TGP. All right, I'm going to take a look at one more. So you guys probably get the hang of it by now. All right, TGP starts the year off at 13.31, goes sideways for a couple of months, drops down to $11, goes sideways, and makes the low of the year in August at $9.43. And then from there, she goes up to a trading range of 14, goes sideways for a little bit, and then right at the beginning of the year, she jumps up to the high of the year at $19.80, goes sideways, drops down, goes sideways to be where she is now at the $16.90 area. Okay, TGP 1690. The stock's all over the place. There's no rhyme or reason to it. So let's just take a quick look at what TGP looks like by the numbers. 1690, but the best thing we're looking at is right there. Because you don't want to go over. The closest you got is the 12.5 by 15. And that's going to be, there you go, $2.50. Numbers just don't work. Buy it for $2.50, sell it for $2.50. Ain't worth the effort. Okay, if I bought the next one down, $2, the most I can make off of it is 50 cents. And I have to wait for it to get to $17.50, which means it has to move up 60 cents for me to make 50 cents. Something ain't stirring the Kool-Aid there. You see that? The stock has to move up 60 cents in order for me to make 50 cents on the option. See? The numbers don't work. Ain't worth it. Okay, so that's basically showing you how to do it. The software can tell you everything you want to know. The trend can be going the right direction. The graphs, the charts, everything can be right. But if the numbers are wrong and the numbers don't work, or it's too much of a risk for the reward, don't get me wrong. If I'm going to risk money, I want to get at least a 30% minimum on the option, because options expire worthless. It's not like you buy a stock and then you get to keep the stock. No, you have to be right with the option in order to be profitable. So just because everything's going your direction, if the numbers don't work, don't do it. That being said, I'm going to check and see if I have any questions. Other than that, I can be out of here. I like being out of here early. No questions. I love it when no questions pop up. That means I can go home early. I am home. Isn't that funny? All right, so I'll get out of here because I don't buy that one. Just for the fun of it, let's see what actually happened today. Today's the 18th, right? So these 12 companies paid their dividend. Oh, today was the EX date for these 12 companies. Let's see who some of them are. Tahoe Resources, Solar Senior Capital, C-SPAN Corporation, SBM Offshore, I don't know what that is, Main Street Capital Corporation, LTC Properties, Harvest Capital Credit Corporation, HB Fuller Company, oh everybody knows that, that's Ford Motor Company, Cody, which is Compass Diversified Holdings, American Capital Senior Floating, and ABB Limited. All right, just for the fun of it, let's take a quick look. All right, so if today's the 18th, today's the EX date for these companies, right? So 10 days prior to today would be the 4th, which means I had to get in first thing in the morning on the 4th. So we would be getting it in on the 3rd. Okay, so let's take a look at these companies, and we'll check from the 3rd to today to see if they went up that much. The first one on the list is ABB. Let's put ABB in. ABB. All right, I'm going to say no right off the bat before I even go any further. Now, the reason I'm saying no is number one, 75-cent dividend. Now, 75 cents is a nice dividend. However, 75 cents on a $22 stock, it's a little on the high side. Okay, that's number one. Number two, look at all the empty spaces. Okay, and I'm going to just open this up a little bit right there. Okay, the empty space there, empty space here, empty space there, 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 empty space, empty space, empty space. See it? See what I'm looking at? And look at this drop. She's at 21.59. The very next day, she opens up at 20. You know, why? Why go from the close of 21.62, the next day opens at 20? Why? Okay, too much movement, too many empty spaces, no consistency. It's probably thinly traded, so I don't want to bother with it. So I'm not even going to check and see if it actually hit the number, okay, because that was not what I did. Now, ACSF, 9.7 cents. I don't like to chase anything below 10 cents, so I'm not even going to look at that. Cody, 36 cents. Let's take a look at Cody. CODI. See, this one's tighter, okay? No big spaces. It's a gap down here, but it's a gap down. Makes sense? No big reasoning whatsoever. Okay, now before I check and see the numbers, let's quickly check the seasonality to see if we would have even have bought this. Okay, now that's what she's looking at, the blue, and here's where she is now. So 2 weeks ago we would have been over here, and we had that little red spike. See the little red spike right here? Okay, we're at the red spike now, okay, which is the dividend. Okay, after the dividend, see how it drops down. Okay, so this is where the blue is. Goes down in value. We would have been out today, so 10 days prior to today would have been way over here, and we have this nice little red spike that we'd be looking at. So this is just one key. Now remember, I told you there's 3 pieces of software that we use to do that. I'm just showing you the seasonality. I don't want to go into the software and all that kind of stuff. I'm just going to quickly show you. All right, let's go back. So standard chart. Now today's the 18th, so we said we're going to go back to the 3rd. And then we would have gotten the signal on the 3rd, so we would have been in on Tuesday the 4th. So let's go back to Tuesday the 4th. Right, there we go. That's the 4th. And that is the 18th. So that's 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, day number 1. Here we go. Now, Cody is looking for 36 cents. Okay? That's it. That's the dividend, 36 cents. So what we're going to do is we're going to take the opening of the day on the 4th. Whatever that price is, we're going to add 36 cents to it and see if we actually hit the target. Because that's what the software would tell us. Now, I'm not putting it into the software because this is just a quick example. I checked the seasonality. Seasonality is just one key. Okay, so she opens up. Okay, remember? Here's the date. This is the O is the opening price. H is the high of the day. The L right here is the low of the day. And the C is the close of the day. Okay? So here we are. She opened up at 16.35. And the high of the day was 16.85. That's a 50-cent move. So yes, Cody did make it. Okay, you would have been out the very first day. Gotta love it. Yay. All right. Let's check Ford. See what Ford's doing. Okay, Ford's looking at 15 cents. Here's the chart here. It looks like it's a slow downtrend, and then it goes sideways for a while. Then a big drop where she is now. Let's take a quick look at the seasonality to see if we would have even gotten in on this. Okay, here's where it is now. 10 days ago would have been the 3rd, right about there. Alrighty, that's a tough one. Because I'm going to say probably no. Okay, see, look down here, right there. See that? Those are the dates. Now we would have got it on the 3rd, which is right here. That would have been our signal. Now, what are we looking at up on the red line? Now, the blue line represents what the stock actually doing now. The red line represents 10 years worth of data, one on top of another, on top of another, on top of another. Okay? The red line is just a suggested idea of where it might be heading based on historical performance. Doesn't mean that's what it's going to do. It just says the odds and the probabilities point in that direction. Okay, so if the 3rd is right here, what does it look like it's going to do? It looks like it's going to go down. So even though Ford is a household name and it's only a 15-cent dividend, and I honestly couldn't tell you at this moment right off the top of my head what the software says because I didn't plug it in there, because this is just a quick little exercise on just, one key. So for those people who don't want to join the membership, then, this is one key. The other 3 are the big main keys, but this is just one. Okay, this a 3rd grader could show you, yeah, that thing's going down. Okay, it's lower. Okay, do I want to buy it if it's going to go lower? I have all these other companies to choose from. Why take the risk? Okay, just because the software says yes, if the seasonality says no, then you have a really tough decision. So go right back to here. What does this show you? This shows you not very happy stuff. Okay, she starts out the year at 13, goes sideways for a little bit, okay, drops down to 12, shoots back up to 14, drops back down to 12, and just goes sideways for a while. She makes a low of the year right around election time. How did that happen? Election time, she hits at election time, and then she goes up and she trades in a range at $12.50 for about 3 months. And then right at the end of March, she goes from $12.58, drops down to where she is now, trading in a range of $11.17. Look at all the red. Okay, all the red and the downtrend. Now, without even looking to see if it made the hit of 15 cents, I'm going to say right off the bat, no. But for those you die-hard fans, Ford fans, don't get me wrong, I love Ford. I do. I'm not monogamous with my vehicle of choice. I'm not a die-hard Ford fan. No, I'm not, put the key in, it starts up and goes. I'm good. I don't care what the label is on it. Let's quickly take a look at the 4th. All right, here's the 4th. Okay, so she opens up at 11.38. Okay, we're only looking for 15 cents. She opened up at 11.38, had a high of 11.48. Okay, that's 10 cents. Didn't make the 15, now did it? She closed at 11.37. Okay, so we're looking at a 15-cent move from 11.38. It's 48. That's 53. 11.53 is the target. See that? And it didn't even hit it. Okay, I told you, look at the software. You have 3 pieces of software in the membership area. Take a look at all of them. Plug the numbers in. Plug the stock symbol in. Take a look at the numbers. If it says good, if it's good, everything checks out, great, buy it. But still take a look at the seasonality and take a look at the trend. The trend in this one is pretty darn obvious. All right, look at that. For the last month, she's going down. Do you really want to buy it? I mean, don't get me wrong. That's the ideal thing for getting rich in the stock market. Buy it low, sell it high. But where's the bottom? Someone is out there buying Ford stock today because it hit the low of 1108. Okay, now at 1108, is that the bottom for Ford stock? I don't know. I honestly could not tell you. Okay, but someone is out there buying it because they're thinking that it is the bottom. But it may not. It may go lower tomorrow. I don't know. The numbers don't look right, so I don't get into it. Okay, who's next? FUL, full. FUL, let's quickly take a look at them. Okay. FUL, try that again. And there she is. Now, FUL, granted they're all over the place, but you can see it's an upward trend. Okay, it's going upward. It's not the greatest in the world. Okay, she starts out the year at 45.06. Peaks down a little bit to 43, about a month, and then she's like all over the place. She's up to 48, down to 41, up to 48, down to 43, up to 47, down to 41, up to 48.65, and she goes sideways for a couple of months. Now she's in the trading range of the $50 area. She's kind of all over the place. But does she make, and she's looking at a 15-cent move on the 4th. So let's go and see what the seasonality looks like. I want you guys to get used to checking this out because it's very valuable. It's not concrete and it's not, it's not etched in stone. I mean, it's just what it's what it did in the past 10 years. So there's a good chance it's going to do it again because the company has been around for a while. People go to work every day. They punch the time clock 9 to 5 or 8 to 4 or whatever it is. They put their 40 hours a week into work, and they show up every day. And over the past 10-year period, this is what the stock has done. Okay? Do the people working there care? No, they want their weekly paycheck. They want to go in, they want to get there on time, they want to do a good job, and they want to leave at the end of the week, and they want to enjoy their weekend. Do they care what the stock numbers look like? Maybe they do, maybe they don't. I don't know. All I know is it's a nice number to look at, but it's not guaranteed. Okay, here's where she is now. 10 days ago, she would have been right about here. Okay, here's where she is now. Okay, 18. We want to look at the 4th, right? The 4th would have been right there. Okay, right off the bat, it looks like it's going to drop and go sideways. So that alone, that's one plus because the trend was an uptrend for the regular stock chart. The seasonality chart, overall, it's up, an uptrend, but right at this very moment in time, if you see right here at this little peak, which is the 4th, which is the day you would have gone in at the open, it would drop down a little bit, so you might be able to wait a couple of days before you bought this one, and then go sideways to the uptrend, because right there at this low it goes up. But from this peak right here on the 4th, it drops down first, then it goes up. Okay, is that something to base your decisions on? No, but it is a small indicator to give you some kind of idea of what could be. I know I hate these wishy-washy answers. I sound like a lawyer. If that, and then this, and it could be, but not saying that because I can't. No, not like that at all. Okay, so let's take a look at the numbers and see if it actually did, because that looked pretty good, and depending on what the software says, would have given us an indication whether we would have gotten into it or not. Okay, so the 4th is right here. Okay, now we're looking for FUL, so 15 cents. She opened up at $50.50. And she made a high of $50.80. It's a 30-cent to the upward move. Okay, she starts out here. It's opening of the day. Okay, $50.50. The high of the day was $50.80. So yes, it did make its 15-cent move. Just because the seasonality says one thing, software says another. That the the trend. Let's take a quick look at that trend again. Okay, the trend starts at the beginning of the year, and it goes to the end of the year. So you can see it. I mean, there's a lot of movement. Down, up, down, up, down, up, blah, 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 all over and over and over again. But she starts off the year at $44.98. And she's at $50.07. That's an upward trend, my friend. So we have the upward trend. The seasonality long term looked good. Now I didn't put it into. I'm going to say it again. I didn't put it in to the software because had you gotten this, you would have gotten this on on April 3rd. Because I send them out. I do my reports on Sunday. You get it at 6 o'clock every Monday morning. Then you have from 6 a.m. until 9:30 a.m. to put your orders in. So you would have gotten into this one in the 3rd or the 4th. Okay, get into the 3rd or the 4th if it came across in the report. Okay. The other ones I'm not going to go into because you basically get the gist of it. You put it in. You take a look at the 1-year chart and see which direction it's going in. And you take a look at the seasonality, see what that says. And you take a look at the 3 different pieces of software on the membership site. Give it a try. Join up for the membership. I'm sure the link is in the description for the video. So after I'm done with the video, you can go to the link, join up and pay your $30 a month and you get your tips. You ask your questions, get the coaching, all that kind of neat stuff because you deserve to get better than you're getting. If you're not getting a double-digit return on your money safely, then you need to do something about it. Now, dividend stocks are great because they have, stability, and they share their profits with you. Okay, there are certain stocks that increase their dividends every single year. Okay, there's some that have increased their dividends every year for 60 years or more. Now, those are companies that I wouldn't mind buying and holding, but I make more money buying and selling, buying and selling, buying and selling. But if I had to hold on to it, let me go back to, not this one. Let's go back to the other stock chart. Not that one. This one. All right. If I had to hold on to Macy's, all right, I bought 1,600 shares. Okay. When did I buy the 1,600 shares? Let's quickly look. I do so much I have to constantly look at what I'm doing. All right. February 21st, I bought the 1,600 shares. March 28th, I got 21 shares additional because of the dividend payment. Now, Macy's at $28.71 now, and I got 1,621 shares. When the dividend comes up to pay again, I will get 1,621 dividends. Okay, whether it's a 10-cent dividend, a 20-cent dividend, 30-cent dividend, I'll be getting 1,621 of them, and I will continue to hold on to that until it reaches the $33.10 move. Now, let me show you quickly where Macy's is. Okay, here's where Macy's is right now. She started out the year at $40.95. Okay, from $40.95, a month later she's at $30.54. Okay, a month later she's at $34. A couple weeks later she's at $31. Then she's at $34. Then she's back down to $31. Then she's at $37. Then she's back down to $31. Then she's up to $40. Then she's back down to $34. Then she's up to $38, $34. And then she hits the boom at the high of the year at $45. She comes down, she hits 41.5, goes back up to hit 43. And then from 43, she drops all the way down. That's almost like a consistent drop from there. There's hardly any up moves. There's a few, like here you have. All right, let's enlarge that a little bit. Okay. From the 43.75 high of the year, okay, she comes down here, hits a 41, and then she hits back up to 41.89. It's an up move, but not a lot. She drops back down to here, hits a low of 36.96, bounces up, hits 38.15. Yeah, it's an up profit, but still, from the 34.79, it's almost straight down to the bottom of 28.65. It hits 28.65, then goes up. It hit a high of 34, back down to 31, back up to 33.5, down to 31, back up and down. You know, it goes up and down, up and down, up and down. And lately, for the last month, she was at 30. She came down to 27, and she was up to, what is that, 29.91. It's almost 30. And she's in the sideways now. She's at 28.71. And I'm waiting for it to get up to, 33.10. It may be a while, but as you can see, the stock is up and down, up and down, up and down. And it's Macy's. Everybody's heard of Macy's. Okay, well, not everybody, but a lot of people have heard of Macy's. Okay, there's a Macy's in almost every major shopping mall. Macy's sponsors the, what is that? The New Year's Day parade in New York. Okay, so with all that being said, I'm going to end up holding on to Macy's until I hit my target of 33.10. If I don't hit it, I'm tying up $23,000, and I'm making 21 shares, which 20. What's 21 times 8? Whatever that is. Okay, I'm making that every 90 days off of that little chunk of money until she hits the target. Okay. However, this account here is up 19% from the beginning of the year. Okay, we are in the second week, or the third week. Are we in the third week? Yes, we're in the third week of the second quarter. Okay? Now there's 12 weeks, I believe there's 12 weeks per quarter. Roughly 12 weeks per quarter. Right? 4, 8, 12, yeah. 12 weeks per quarter, we're into the third week. So we got still quite a way before we're even halfway into the year, and we're already up 19%. I think that's pretty awesome. With companies you've heard of. You've heard of Colgate-Palmolive. You've heard of Macy's. What's BMO? I don't even know what the BMO is. More info on BMO, fundamentals, company news. BMO. Oh, let's get out of there. All right. I don't know who the hell BMO is. More information. BMO market new company news. All right. BMO Asset Management Company announces cash distribution for whatever that is. For BMX exchange traded funds. Okay. BMO ups Costco target on impressive March sale. All right. F3 from BMO shows registration of 25 billion mixed securities shelf offering. Cool. BMO, Bank of Montreal. There you go. Bank of Montreal selling bill down to retire in October. Okay. BMO bill downs to retire. Okay, big deal. Okay, so it's the Bank of Montreal. So I own 600 shares of that. Big deal. I'm down almost $500 on BMO. 21,000's riding on it, so I'm not going to get rid of it. I'm going to collect, 600 dividends or whatever BMO is offering, and then go from there. But I have another week to go before we're actually into the 10 days, and we're past 10 o'clock. I like to give these an hour shorter. I'm out of here. Just quickly check for one more time. See if you have any questions. No question. Can you give me an example of cash flow per week, such as 1% per week? Okay, let's give that a try. So you're looking for cash flow per week for 1% per week. All right. Quickly go into the marketplace. I'm going to do strictly just dividend stocks. Okay. Quick example. We are the 18th, which is here. All these companies are going to be paying their dividends this week. Okay. So I don't want to deal with them I want to deal with companies that are paying their dividend next week or the week after. Okay, so let's take a few of these. All right, Monday, for instance. I want to find out who. Now, when you want to get a weekly return for 1%, 2%, whatever you want, you have to remember. Now, this is very important. The higher reward, higher risk. Okay. Now, do you want to do just dividend investing, or do you want to throw options into the mix also? So I'm going to show you a couple of them, a couple of strategies to look for the 1% for the week. Now, I'm only going to use dividend stocks, and the reason is because usually, now if you remember, you could take all these stock symbols and put them into the software, and the software will tell you whether or not it's going to make the move, okay, coming up into the dividend. Okay, so I'm going to quickly, without using the software, quickly show you what we're looking at. Now, Monday, the 24th, we're looking at all these companies here, and I'm going to pick Lowe's right here because we all know who Lowe's is. All right, Lowe's just so happens to be a dividend king. So if you buy it, you end up stuck with it. You get your dividend increased every year because they've done so for the past 50 years or more. Okay, they got a 35-cent dividend coming out. Let's quickly put Lowe's in. LOW. Okay, so this is what Lowe's is looking like so far for this year. She starts out the year at 76.95, goes sideways for a bit, jumps up. 79, goes sideways for a bit, jumps up again. 82, goes sideways for a bit. And then for some strange reason, right around August, she drops from 81 down to 77. Goes sideways for a couple weeks, drops down to 71, goes sideways for a couple weeks, drops down to hit the low of the year at 65. Now from 65, she jumps up at 76, goes sideways, and then right around the end of February, she gaps up from 75 up to 82, where she's been trading for the last couple of months. Now, she's at 82 now. Now, you want to make the trade just to collect 1% for the week. There's a couple of strategies you can use. The simplest and easiest one is you buy the stock and you sell a call option against it. It's called a covered call. Now, let's go to trade and let's put in LOW. Okay, here's where Lowe's is right at the moment. I'm going to change the spread to a single. Okay, so at 83.13, oh, 82.13 is where the stock is right now. So if I bought this at 82.13, and here you go, right here. Let me pull up my calculator. There we go. Oops, sorry. I'm all over the place, aren't I? All right. Now, 82.13 is the stock price. Okay, so if I bought it at 82.13 and sold this week's option for 50 cents, I'd be making only 10 cents on that one. All right, let's buy that. 82.40. Okay. All right, so if I bought this, I'll be spending now. If I'm on margin, you know the difference between margin and in all cash? All cash, you'd be paying $82.40 per share. On margin, you'd cut that in half because you're using half of the house's money. You should be paying $41.20. Okay, so there's a huge difference when you're using margin money. Now, there's a lot more risk to it, but if you're using dividend stocks and you're investing with using software and you're following the numbers, then your risk is extremely reduced. Okay, so at 100 shares of Lowe's, 82 to open, I would be spending $4,133. Okay, just for the fun of it, let's do that. All right. Then what I want to do is I want to sell someone the option of buying it from me for $82.50. Okay, at 26 cents, how much is that? All right, the most I can make on that is $260. So $260 on a $4,100 investment. Okay, $4,126 investment, and I divide that by 260 for the option I just sold, and that comes to wrong. Sorry about that. Sorry about try that again. $260 profit. Okay, and I divide that by how much I just spent, which is $4,156. Okay, that's 6% profit for the week. If you're using all cash, you cut that in half, that's a 3% profit. See how that worked? All right, I'd be getting, all right, I wouldn't be getting 260, I'd be getting 252 because you got to take out for the commission. All right, so it's a little bit less than 3% if you're using an all cash. All cash, you buy it for $82.40, which is what it is right here, $82.40. You're selling someone the option to buy it from you at $82.50, so you're making 10 cents on top of that, plus the $260 that you get in cash right away. So you're making 3% on your money for a 4-day trade. Do you see that? Okay. Now let's get out of that one and let me show you another one. We're going to use Lowe's again. This time we're going to use a spread, a vertical spread. Now that's going to be for this week because you want to get in, you want to get out before the week is over. Now Lowe's is at 82.13. We want to buy the 81.50 82 spread. See that? And we're going to pay a whopping 30 cents for it. Okay. Do you see what I'm saying? All right. I really can't see what you're saying, but anyway, what's going to happen is the most money I can make is the difference between what I'm buying and what I am selling. Okay. I'm buying 10 contracts of Lowe's at 81.50. Okay, you understand that? I'm buying the contract at 81.50, and then I'm simultaneously selling 10 contracts at 82. So the difference between 81.50 and 82 is only 50 cents. Okay, so it's 50 cents per contract. Okay, so what am I paying for it? Right now I'm paying 30 cents for it. Okay, so I'm paying 30 cents for a 50-cent profit. Do you understand that? Okay, 30 cents, the most I can make is a difference between 81.5 and 82, which is 50 cents. I'm paying 30 cents for that, so the most I can make is 20 cents. Not a lot of money, right? However, at 10 contracts, it's costing me $306. All right, $315 because you're paying for the commissions. Okay? The most I can make is $200. Here's the great part about that. Okay? The stock is already at 82. I'm buying the 81.50 and I'm selling the 82. Okay, all at the same time. It's called a debit spread. The most I can make is the 50 cents between the 81.5 and the 82. It's the most I can make. But I'm paying 30 cents for that, or $315. The most I can make is 200. Now 200 is more than 50% of 315. Let's quickly find out exactly what it is. Tell you exactly. Clear. The most I can make is $200, and it's costing me $315 to make that trade. Right? 63%. 63% return on your money. So I'm actually going to do this trade. So what the hell with it? Let's do this one. All right, but I'm going to do 100 contracts. Okay, so it's costing me $3,150. The most I can make is $2,000. Now, the stock has got to stay above 82. Okay, before I even do that, let's quickly take a look at the seasonality, see what low is going to look like for the next couple of days. Okay. Okay, here's where we are right now. As you can see, I got 3 days. I got Wednesday, Thursday, Friday. This thing's got to stay above 82 the next 3 days. Now, this is not looking too promising because it looks like it's going sideways. Now, remember I told you, the seasonality does not constitute the exact movement of the stock. It's a good probability because that's what it did over the last 10 years. Now, interesting about the last 10 years as opposed to this year. This year, Donald Trump is in the office. He's the first non-military, political president we've had. Every other president's been a politician. All the stocks have been up. So this is not a typical year. So the seasonality is not going to be as accurate for weighing this year as opposed to last year and the year before. So let me quickly go back to normal chart. Okay, here's where we are now. Look at this. This looks like a nice bottom line right here. Monday, Tuesday, two up lines right there. I am going to bet that this thing's going to continue up or stay the same in the next 3 days. So, let's do it. Okay, so it's costing me $3,150. The most I can make off this is $2,000. All right, let's clear that. $2,000. And I'm going to divide it by what it's costing me, $3,150. And there you go, 63% in 3 days. You want to learn how to make 1% on your money? Great. Here's how you can make 63% in the next 3 days. And don't get me wrong, I'm not telling you to do this. Okay? I am not telling you to do this. I'm just going to do it because the numbers work for me. All right. There it goes. I probably shouldn't have done it in that account because that account is my... I think it is. Oh, no. That is my option trading account. Okay. That works for me. All right. So that gives you an idea how to make 1%. And I showed you the debit spreads. The vertical debit spread. I showed you the... What do you call that? Excuse me. The vertical debit spread. I showed you the covered call. Let's show you another one. Now you could now this is a tough one. How would you just buy the stock and collect the dividend? Because the dividend is going to be paying out. What did we say? Lows on the 24th, which is next Monday. Which means I want to be out of that stock by Friday, by the close of business Friday, which is perfect because the option expires on Friday. Okay, so do I want to do lows to collect a dividend between now and then? It's a possibility. Are you going to make that 1%? I don't know. I can't guarantee that. I can't tell you whether you are or not. But all I can see here, everything looks good. You know, that's just for lows. You know, check out all the other software. Check out the software and see what that tells you. But if you're looking to make the 1% and you want to just buy the stock, collect the dividend, fine, great, do it. Is it going to make you 1%? I don't know. I honestly don't. You know, the software is designed to get in, grab the profit, and get out. Okay? You take a look at the 3 pieces of software on the memberships in the membership area. You take a look at the 10-year chart, see what that looks like. Take a look at the 1-year chart, see what that looks like. Take a year at the seasonality. All this should take you less than 10 minutes. Because basically you just log on, put the stock symbol in, and after a while, it's boom, 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 real easy. You look at the numbers. You look at the high of the year. You look at the low of the year. You look at where is it now? Where is it projected to go for the next year? Okay, what did the analyst say it's going to go? Okay, is there enough volume? Is the dividend high enough for you to keep? Now, Lowe's, don't get me wrong, Lowe's is a great company. They've been increasing their dividends for 50 years or more. That's not an easy feat to do. And everybody's heard of Lowe's. So yeah, you buy the company and you hold on to it and you collect 35 cents per share every 90 days. If not, do the trade I just showed you. Buy it at the price that it's at. You sell it to someone else for the exact same price you paid for it with the option. That way you're paying $82.13 for it and you're selling it for $82.50, which was the where was that? Let's go back to the singles. Okay, the $82.50 right here was at 26 cents. Okay, you're buying it at $82.40. Okay, no, you buy it first thing in the morning, $82.40, and you sell someone the option to buy it from you at $82.50. You're making 10 cents per share on that, plus you're making 26 cents per share for them to buy it for you at that price. That alone should give you your 1%. Actually, it should give you more than 1%, and that's using all cash. If you use margin money, whatever money you're getting on cash, you just double that with the margin. Okay. Now, I'm not telling you to do margin. Okay. I'm not telling you to do anything. Make sure you understand that. I'm not telling you to do anything. I'm telling you this is what you could do, and this is what the numbers look like. It's up to you to figure out if that's what you want to do. Okay, I've been on here long enough. Let me check and see if any more questions. Other than that, I'm out of here. Dividends, please. I just showed you the dividends. That's basically what you're going to get. All right, so Lowe's is an option for you if you just want to cover the dividends. Buy it tomorrow and get rid of it by Friday because EX date is Monday. You don't want to hold it into the EX date. Check out the software. See what the software tells you to do. Anyway, this is James. I'm checking out for now, and you guys have a great day. And I will see you on Thursday, and we'll talk about more stuff. I hope that answered your question. I gave you 3 options to get that 1% that you were looking for. If you need more help, hey, sign up for the one-on-one coaching, and I can, walk you hand in hand and show you how to do all that nice, neat, fun stuff that I do. It's a little bit more risk, but it's a lot more reward. And remember, bottom line, worst case scenario, you end up holding on to companies like Lowe's, Hewlett Packard, IBM, Apple, good solid companies, and you hold on to them for however long you want to hold on to them, or you just trade them. This is James signing out. We'll catch you Thursday. All right, see you Thursday.